Financial. Once the industry
$95. It's 30 days late, it's 60 days late. They paid on time. These FICO scores. Late. Oh, they caught up on their payments. Another 30 days late. LTV 95, LTV 90. They caught up on their
60
payments.
days late. Jesus, when is LTV 110? I've never heard of that.
30 days late, rated adjustments. 7 rate adjustments. LTV 95, 90.
Jesus.
He hasn't moved all day. He does this every few days. Hasn't spoken to me since he hired me.
Rated LTV of high risk interest only.
Heard of that mortgages. He's heard of this LTV.
Ow.
Michael, how are you, guy?
Lawrence, I found something really interesting.
Great, Michael. Whenever you find something interesting,
We all tend to make money. What stock are you valuing?
No stocks. I want to short the housing market.
really. But the housing market is rock solid.
Solid. Greenspan just said, bubbles are regional, defaults are rare. Tell them I'll be there.
In a minute. Say again?
Look, Greenspan's wrong.
I don't think you mean to do this, but sometimes you sound very
Dismissive and superior.
superior.
It's a fact. Greenspan's wrong. I don't know how else you want it.
Look, Michael, Metro Capital,
Back to 4 years ago when you were a doctor with a
dinky web page and some.
inheritance money. We've all done very well.
Why don't you just stick with stocks?
You know me. I look
For value wherever it can be found. And the fact is that these mortgage-backed securities are filled
with extremely risky subprime adjustable rate loans, and when the majority of the adjustable rates kick in 07, they will
begin to fail. And if they fail above 15%, the whole bond is worthless.
Michael, just take a beat. We'll talk about this later.
Lawrence, please don't patronize me. It's
Mortgage-backed securities, subprime loans, tranches. It's pretty confusing, right? Does it make you feel bored or stupid? Well, it's supposed to. Wall Street loves to use confusing terms to make you think only they can do what they do. Or even better, for you just to leave them the fuck alone. So here's Margot Robbie in a bubble bath to explain.
Basically, Louis Rainieri's mortgage bonds were amazingly profitable for the big banks. They made billions and billions on their 2% fee they got for selling each of these bonds. But then they started running out of mortgages to put in them. After all, there are only so many homes and so many people with good enough jobs to buy them, right? So the banks started filling these bonds with riskier and riskier mortgages. Thank you, Banjo. That way, they can keep that profit machine churning, right? By the way, these risky mortgages are called subprime. So whenever you hear subprime, think shit. Our friend Michael Burry found out that these mortgage bonds that were supposedly 65% AAA were actually just mostly full of shit. So now he's going to short the bonds, which means to back.
How do you know the bonds are worthless? Aren't they filled with fucking thousands of
Pages of mortgages?
I read them.
You read them?
Yes.
No one reads them. Only the lawyers who put them together read them.
I don't think that they even know what they've made. The housing market is propped up on these bad loans. It's a time bomb, and I want to short it.
Through what instrument, Michael? There are no insurance contracts or options for mortgage bonds. The bonds are too stable.
Lawrence,
This is what I'm going to do. I am going to get a bank to make me one. And then I'm going to buy it.
Evening, guys. Yeah, no, pretty good movie. If you've never seen Big Short, definitely worth having a little look at. You know, what he's talking about there is just sort of precursor. He was one of the people that was shorting US housing before the big implosion. Now, you know, even in Australia, right, we got this situation where a lot of our loans, including my housing loan, is interest only. And, you know, these interest only loans have set periods, and if they ban them, there's a significant number of investors who take advantage of tax situations here in Australia. Basically, we can do something in Australia that's pretty uncommon as well. Apart from interest only loans, we can invest in a house, and our interest, if we buy a second house, we can use that interest as a cost to take away from any earnings and the rent. So basically, you can free roll a lot of housing investment here. And so it's definitely contributed to the bond, to the housing bubble here. We've had 26 years without a recession. That's helped as well. We've had a huge China boom that's just eaten up all our resources. That's helped as well. But there hasn't been a bubble which hasn't burst. And so Sydney prices were already extreme last year, and then year to date they're up 20% more. So literally most houses are million plus. Everything is sort of frothy, and in terms of that equity, that extra equity, a lot of people have taken out extra loans and spent that extra equity that they've made, or reinvested it into a second or third or fourth or fifth or sixth house, using the extra equity they've made from the previous increase to go and then buy another house on interest free. And so and also we've got, you know, cashed up foreign buyers coming in as well, and if that stops, it's really hard to see how big the impact's going to be. But obviously anything which is doubled in 6 years, like, you know, Sydney housing, it could definitely have some sort of pullback. And, you know, eventually we will. And no one understands how emotional, you know, sort of declines can get until it's in the middle of one. Now, that being said, right, so local sentiment towards Australia is quite weak. That being said, we just had data out that just suggests that our economy is ridiculously strong. We had our unemployment numbers come out crazy, right? Our unemployment numbers came out today in March, forecast at 20,000 new jobs, came out 60,000. You know, full-time employment plus 75,000. Now that's like NFP coming out 500,000. It's so strong that it's probably an error. Right, that's how you know, no one, although the market's rallying on the back of it, it's almost worth having an inquiry. About 5 or 6 years ago, the numbers came in around 120,000, which is like ridiculous. It can't be like that. And there was a big inquiry, and they found out there was statistical errors, and you know, there was a big hoo-ha about our ABS, which is our country's statistics bureau, and it's been a lot more stable since then, but still pretty wild in terms of fluctuations. So, you know, really take that with a grain of salt. If you're trading the Aussie dollar, just be aware that local participants don't believe that number. Sentiment on the ground here is definitely not strong, and it's hard to believe. You know, and it's not like this is concrete sort of stuff. This is, you know, sort of survey data, right? And perhaps there has been some sort of error here, because it strikes me as sort of ridiculous that we have 75,000 new jobs in this country at the moment. But, you know, you've got to play the price action. We've got a short squeeze going on with the Aussie. That with China also, and US making nice, and Trump trying to talk down the US dollar. We've got some severe US dollar weakness, and potential short squeeze above 76 here, with stops supposedly around 76.10, and that could take us up to 76.40 quite easily. Now the Trump's comments yesterday had a twofold effect. He wants a weak US dollar, and he wants the US to raise rates, keep rates lower for longer. Now that has the effect of keeping obviously dollar yen down, but if you look at the yields, US yields broke a key level. So US 10-year broke below 2.3. Now's the first time it's done that. Now, this is the thing about the Trump trade and the Trump rally. US yields are making new lows. Oh, this is, if you're buying dollar yen, you do not want to look at that, right? Dollar yen had a little bounce in Asia. This is new lows on the yields here. Very likely dollar yen's going to make new lows now. So don't be buying here on the dollar yen just yet. Dollar yen has some big support though. You got 200-day moving average, and you got 108, just a normal sort of level that a lot of traders were hoping for. But if yields collapse further, it is hard to be buying dollar yen because they're very reactive to that. You know, US yields falling when Japan yields aren't moving. You've got that extra impetus for the market to collapse further. Really, this opens up a trade to me that's quite easy, is to buy the euro. Right, so that's the trade I'm looking at. In terms of what's moved, what has happened is US dollar's been sold aggressively. US yields have fallen back aggressively. The one thing in the Trump trade which hasn't fallen just yet, and is surprisingly resilient, is the stock market. So the stocks, if they were trying to follow sort of the same relationship with dollar yen and bonds, would be at 20,000 and below, right? So that's how far outperforming. You know, this is 115 sort of levels on the dollar yen. This is 110, and we've broken below. It could even be lower than that if it was correlated as same amount of correlation as when the market went up. If the same correlation is held on the way back down with the dollar, then yeah, stocks would be a lot lower now. Are the stocks the dumb money, or are the bonds and the US dollar wrong? Right, one of them is wrong. So, you know, stocks usually are known as the dumb money and the last ones to react. So hopefully that's the case if you're short, right? I'm not really having a position here, but I can understand, you know, sort of the market rolling over here. And you're getting that multiple tests of this level, and maybe a final break will be negative. Now there's enough negative news out there, reasons to be short anyway, or just to be cautious. I mean, look, overnight the news out that Trump and China had a good discussion on North Korea is probably risk on, and that's if that's where their conversation ended, and he didn't talk about weak US dollar, weak US interest rates, then dollar would have had a good day, right? But the weak US dollar, the jawboning that Trump did, really was the sort of straw that snapped the back's neck of the bond market, and dollar yen's going to struggle here while that's the case. So I do like this. I do like this buying the euro on the dip towards 106.30. I'm looking, and while I'm not against buying dollar yen just generally at these levels, I want to see a sort of a reason. Yeah, I don't want to see stock markets testing supports and, you know, buying just because it's cheap. You know, there's price action. A sustainable rally is really what I want to be able to pinpoint. Some sort of news which, so like at this point, what we really want, if you were a dollar buyer, would be a hawkish Fed member, you know, talking about raising rates in June or July. If we got that, and the yields responded, and 10-year yields went above 2.3, you could easily buy dollar yen for a move back to 112, which would be a tradable sort of move. In euro, you wouldn't play the euro, you'd probably play the euro yen, but the euro still has these French elections coming up in 2 weeks, so maybe any sort of move is going to be a little bit more dampened on that. And so, yeah, we definitely got an interesting market here. Do I think it's okay to trade over the weekend? Look, probably the North Korea and Syria situation will even calm further. Therefore, you have the ability for risk on to come back in on Tuesday. But Forex is open on Friday and on Monday. So it's just the stock markets and the commodity markets which are closed. So it's while it can be quiet, you can start to see moves in those markets as well. And in a thin market, this is what you need to know about thin markets, holiday markets. While the market doesn't move much, because there's usually not a reason to, if there is a reason to, because it's thin, because there isn't many players, the market will move more. So the same story which might move the market 200 pips or 100 pips, so say the same story which moves the market 100 pips when the market's fully open and everything's moving, might move it 200 pips in a thin holiday market just because the stops will be so easy to take out. Now, there's been many examples in the past 5 years where huge levels have been cleaned out during these holiday markets. So that's the reason not to have trades open. You know, crazy stuff happens, right? I remember, I think it was like a 300-point rally in euro dollar on Christmas Eve or New Year's Eve. You know, that on back of nothing but a short squeeze. Let's find it. Let's find that. Remember that day, you guys? That was nuts. Where was that? Where were you? New Year's Eve. From 103.70 up to 106.50. Go on a 4 hour. It was mostly done in like 1 4 hour period during this Asian session. So yeah, it started up to 2 a.m. and then so 104.80 all the way to 106.80. That was just like in the space of an hour, and there was no news. It just stops hit above 105, and then bang. So that sort of thing can happen in both directions, right? In the current market, dollar yen might do a clean out right to the downside. So yeah, keep that in the back of your mind. It's sort of, the market can definitely go haywire. I'm still looking to be buying some euro here on the dip. That would be the main trade I'm looking at tonight. In terms of data though, the US data comes out on Friday still. Tonight we have the unemployment claims and consumer sentiment. So they use US data tomorrow night. And we're probably going to get the treasury currency report in the next 2 days as well. Which no longer China is going to be called a currency manipulator according to Trump. So that's a much less watched theme. And that's another reason why Aussie is so strong, right? Because China's taken that off the table. And it's probably a quid pro quo, right? He did that, he said that to them. I'm not going to call you a currency manipulator, you're going to help me with North Korea. I'm 100% sure this is going on. Yeah, and there's no proof of it, but it just makes sense. Yeah, why not leverage that currency report at an opportune time to try and get some coordination with policy on North Korea. Yeah, so with gold, the theme would be to sell gold as tensions settle down. Now the US dollar weakness and the yields does throw a spanner into that. And also if stock markets break down in the US in a delayed reaction, regardless of when they start to fall, if they do fall, then gold will go higher as well. So it's the same as like buying dollar yen. It makes sense that these are really good levels and gold probably is unsustainably higher here, but short term it may not be over yet. And you may get a much nicer level. You might get 108, 107, 105 even, 106 on the dollar yen. You might get 1330 on gold. So I'm in no hurry. But yeah, I mean, if you're tactical and you're scalping in and out, then gold should be coming under rounds of profit taking at some point. Yeah. Get a little bit of profit taking at some point, and you know, this is day 4 or something of the rally. So yeah, you know, $10, $15 profit taking if that's what you're looking for. Sustained sell-off would require US dollar strength, so you need some catalyst. Whenever you're looking at buying dollar yen, if there's some Fed speaker or whatever, stock market rally, then you can sell gold in the same sort of environment on that sort of moment. But yeah, right now you're asking it to turn around on a dime when 1300 is such a better level to be selling at, and 1330 is not that far away. Gold's pretty aggressive, right? Technically it's broken here, so it should be going up. It's dollar yen probably somehow is going to find a way down to 108. But yeah, I mean, I'm not against it. If I get the news, if the right news comes out that helps the US dollar, then yeah, buying dollar yen, selling gold makes sense. Yeah, RS. If that's true, a lot of these brokers might be closed, taking an extended weekend. But yeah, at least then you won't get stopped out of your trades and something crazy. Yeah, Euro Pound is a favorite of mine to sell. I make no qualms about being a bull on the pound until we at least have a clean out. Now the clean out for the pound is the move to 127, 130. So it hasn't happened yet. So the short squeeze is still on. That being said, I don't think that Le Pen has a chance. So these levels aren't that attractive to me on the Euro Pound. But it looks like it's grinding lower, yeah? And it grinds lower and shoots higher is its normal status. Next month we'd start to get negotiations. Perhaps we'll have two-way action. I'm happy selling above 86. So that's 120 pips away, so I'm not really interested here. I like to sell into when I get an opportunity. Yeah. Now, a short squeeze on the pound towards 127, 130 does take us down to 83, even lower. And I hope I don't miss all of that. I think the last trade I did here was a short up at 86.50 or something. Ended up closing out way too early when the market turned around. But you'll get many opportunities to sell Euro Pound in the coming years. And as long as things don't completely fall apart, then it should be a lot lower in a year or two time. But these negotiations are going to create lots of volatility for us. You should actually be happy about these extended negotiations because it's going to be constant two-way price action probably. Alright, so selling rallies, at least wait for a move above 86. And if it happens to have that short squeeze in the pound against the US, right, then you missed it. RS would be a good one to ask if he believes the Australian jobs are real or not. It's to me, it'd probably see something in weekend papers like Labor wants inquiry into ABS statistics. A local party here. It strikes me as just way too much. Wait, what? There was actually an error in the statistics? That it didn't affect the employment numbers? Yeah, right. Okay. I don't know, it just seems too outrageous. Too outrageous to me. It's so unbelievable that I think that many traders will discount it as being next month expect to have huge revisions. You'll probably make a trading plan around selling the Aussie into next month's employment data. put a little note to remind myself to do that. Alright, they're suggesting it's not completely unreasonable given the business surveys and job ads. Queensland. Okay. Alright. I mean, I'm from Queensland. And a lot of my clients from Queensland, no one's really telling me it's great up there, that's for sure. There's definitely some lulls in the property construction market up there. That's, I can 100% guarantee on that. I don't know where they're getting so excited from. Where the jobs are coming in, yeah? The medium-term case for the euro to usurp as it as the strongest of the major currencies grows steadily, even if European political uncertainty holds it back in the short term. So this is the long euro trade we're talking about, based upon, you know, Europe coming out of its QE program towards the beginning of rate hikes, where you see the biggest change in yields, and the US have little room, but to continue raising rates, but the risk is that it slows down in the US and they don't raise rates, so that it's an asymmetrical sort of risk that's building up, supporting a euro long view. I like that. I like that a lot. I like that sort of trade. I like, and I've got to remember it, if the market crashes on the back of something with the euro, right, that it's a good buying opportunity for once you get past it, assuming we get past it, right? Dollar yen is a buy once US yields find a base. Completely, 100%. You know what that was also a buy? Euro yen. Euro yen's a huge buy once dollar yen becomes a buy. It's just because we've got some crazy sort of levels down here. Euro yen is can't stay low forever, right? It's just, unless you get a continued risk off. We looked at this, right? The weekly. That's a lot of weeks down in a row. This is the 5th week. So this is a lot to do with just, ECB paring back. You got that political uncertainty in France, and you've got dollar yen crashing. Euro's not going to stay in a tight range forever. Dollar yen's not going to fall forever. Stabilization in the markets is. I'm going to be looking at dollar yen and euro yen here. Easily can see some green boys coming here. So we talked about it last night, actually, 113 being ideal. That's a little bit maybe too wishful thinking. Alright, a rally would be lower than Le Pen-inspired spurge, but 110 is quite likely quickly, and we don't rule out a very sharp spike higher later this year. So even as the Fed's raising rates, the euro can continue to rally. Really, there's going to be a big ECB meeting where they talk about, you know, the tapering of QE and the raising of rates. That meeting later in the year is going to be really, you know, the catalyst for the big move higher in the euro, if it happens, right? If things don't fall apart somewhere. Because long-term currency forecasting is so easy to do. Where are we on the euro? I'm going to buy a little bit here. The reason I like to be buying the euro at the moment on the dip is I think the sort of support's been found here, higher than 105. I'm going to put my stop in at 105.60 again, so decent stop. Can definitely be touched. Then I'm still going to be looking at 105 and 103.80 to re-engage, depending on the reason why we're falling, to try and develop a bit of exposure if and when the market turns. Top side, quite ambitious. We'll go for 107.80. Definitely a two-way market. Yeah, there's definitely sellers out there though. People who on the wrong side of this, on the other side of this trade. This is we were in this trade early in the week, remember, and we took profit yesterday when US dollar looked like it was having a bid. This was before Trump's comments. Hey Hans, how are you, mate? It's, how's gold treating you? You're selling it, aren't you? I mean, look, I believe in the short gold trade eventually. It's just dangerous, you know. It's wiping people out. You got more balls than me. You really have to have your risk management on pat, don't you? It's I can't. Yeah, I'm a bit scared to play gold these days. Yeah, Nick's from Sydney. Ask him about the housing market. I think he was involved in housing a lot back in the day. He's in his first career. Alright, so we'll quickly finish up with the early morning read from Deutsche Bank, see if we've missed anything. So Trump in the Wall Street Journal, yeah. It's very, very hard to compete when you have a strong dollar and other countries of varying currency. So China's not a currency manipulator. It's a big change, right? You know, it would be hilarious if Trump ends up being the biggest currency manipulator of all time. Which he could end up being, because he's already started out that way, right? You know, he has the ability to hurt the dollar more than you understand. Like he's said stuff which is crazy. Like, you know, quote me here. It's the 13th of April 2017. Guarantee sometime in this guy's presidency, he talks about negotiating on US debt, right, as a tool to get the US dollar low. I don't know if that would work. I don't know if that would work. Cause yields to spike, wouldn't it? I don't know. I bet you he makes some sort of comment like this though. At some point. Yeah, so there's no reason to chase the US dollar there, Tim Doug. The Aussie dollar here. Stops are close, but I think the trade I would be looking to do is fade at 76.30, 76.40 to sell up there. Yeah, if you really want to buy, I suppose you can be looking at Aussie yen. Give a bit of hedged exposure there. I just don't want to play it. I don't believe that data, and I don't want to be buying on the back of Trump's comments. And if stock markets fall, then Aussie gets hit. And next time, if we do have a little bounce up here, right, and it falls down again, I doubt we're going to be holding this support. So, yeah, no, it can get into trouble. Like, if you're going to buy on the dip, yeah, you can do it. Just put, 20, 30 pip stop. Don't go to war with it. Yeah, Nick's probably just having dinner. It's dinner time. Alright guys, well look, I will be streaming probably Tuesday to Friday next week, not the early session, not the Monday session, take the day off. Keep an eye on everything though. I mean, there's a lot in flux here. I mean, the market's at really nice levels, so there's going to be some volatility. I think we're a little early in selling gold or buying dollar yen just yet. Main trade I'm looking to do is just buy a little bit of euro here on the dip, see how we go with that. If you do, you don't have to have a huge stop. You really shouldn't get back below 106, so you can close out if it does. But other than that, US CPI tomorrow will be something to watch out for with the dollar yen. Could be a potential catalyst there for recovery. And yeah, it's an interesting market. Everyone have a happy Easter. If you have any questions, just send me a little PM.